Big day. So what we saw yesterday was that the Fed came out and they were essentially giving their floor plan as to what's going to happen over the next, should we say maybe like, I'm going to say the next 3, 4 weeks. Okay. And I know that they've said, longer term things, we will look into those. But the big key takeaways here, guys, have really been let's just find out and see what's going to happen later. And they have committed to not pausing. We'll get into all the details soon. This is what we're waking up to, guys. This is the chart of Bitcoin on the half hour. Let's have a bigger look at this. Also, like the video if you do want to see more of this content, breaking down what it is that the Fed are actually talking about and what it really means for the crypto markets themselves. So we did see the RSI previously, made a bit of a jump. And so, moving to the downside, kind of to be expected, but also the main driver of this was, of course, Jerome Powell. Okay, so we're seeing the crypto market begin to really recover. And I think this is as the US session closed. And also we're seeing this Asian session really open up and begin trading. So just looking through here, want to show you very quickly, S&P 500 down by 2.5%. The Nasdaq 100 down by 3.5%, which is pretty crazy. Not looking great, we can look into the futures market and stuff, but this is how we're currently looking, which is not it's not good. I mean, this little recovery from the crypto market could be a slight bit of a hedge, shall we say, against Jerome Powell. Now, there's two different articles I want to show you which really summarize everything that went on. I will just play this clip here so that we can get an understanding as to what it is Jerome Powell is saying. Okay, so notice how he's saying he's waiting on some of the data, and also some of the data he's had previously is indicating that we're going to have more aggressive or continuous rate hikes. Not more aggressive in terms of the number, but just continuing and getting to a higher terminal rate. So he doesn't know. Now, one thing that he has said here is the lags, because once the Fed increased the rate hike, obviously that then feeds into the banks. And then from there, that then feeds into the consumers. But it takes a bit of time for that to happen, okay? So the banks and the businesses begin to feel a little bit more restriction quicker than we see the consumers. Now, CPI and, what we kind of judge everything on is unemployment. We judge it on the cost to the end user, which is the consumer. And so then we base upon their spending habits, and their spending habits, the reports don't come out till like a month later, but also it's just that natural time of a rate hike feeding then down into the businesses and then are finally affecting the consumer spending. That's what he means when he's talking about these lags that we see. So we might get into a territory where we're kind of over tightening. And so the Fed have actually said they would rather do this. And there's a few quotes that I have for you, but just going to show you this pictorial description here. Well, I mean, it's a picture. I don't know why I tried to fancy that up. But the Fed extends a series of huge interest rate hikes, 75 basis points. We know it was going to happen, guys. I told you it was going to happen, as did pretty much, I'm assuming, every economist who's worth their salt, apart from those guys who said maybe, oh, he's actually going to do a 50. Not sure why they were kind of thinking that, but anyway. One thing that we should see, unemployment rate. This is the number one key that these guys are following. Like I've said before, they had many different focuses. They said they want to get inflation down, but keep ourselves out of a recession. They've then said, look, we just want to get unemployment up, but also keep us out of a recession. And now they're just like, look, we're going to have a recession, but if we can get unemployment up, then that should be good. Obviously less people having less money in the markets and control the kind of wage spiral hike or wage spiral. wage price spiral is the technical term. But it basically just means, you leave your job, you get a higher paying job, and then because someone's paying you more, they have to charge more for their services. So then therefore someone else has to leave their job in order to actually have more money to be able to afford the stuff that everybody else is selling. But the change in personal consumption expenditures is actually going up. So people are consuming and spending more. This needs to be coming down and unemployment needs to be coming up. So this is why Jerome Powell is saying there's still a long way for us to go. Now, there's a few quotes that I want to show you here. Just looking down here, Bloomberg economist says Powell sent a clear message to markets. Don't expect us to continue raising rates by 75 basis points every time. Not, we're never going to do it again, but don't expect it every time. But we're not making a dovish pivot either. Unemployment at 3.5% is matching 5-decade lows. Job openings, which Powell watches closely, unexpectedly rebounded in September. This is one thing I mentioned to you guys on the channel. This is not good for the markets. With the ratio of available positions for every unemployed person now at 1.9%. We need this to be at basically like 1-to-1. That would be ideal because at the moment there's still an extra zero 0.9. It's like every person has 1.9 options to move into who's unemployed, which means we can fill all of the positions and unemployment could go to zero, but it'd still be open positions, and that's not really what we want. The Fed's latest rate hike comes just days before the midterm congressional elections, which is one thing. It's why I think that he had to be very cautious and careful in what he was saying, because we have to bring this into effect amid rising criticism from Democrats who are worried that higher borrowing costs will push up unemployment. There's a lot of pressure on Powell to stop and pause and wait for the lags. And these are the lags that we mentioned earlier. The lags between, are they going to actually over tighten? I have a hair in my mouth. Are they going to over tighten and then be like, we've made a mistake. I'm sorry. Now inflation is at 1% instead of at the targeted 2.5. So there's a couple more points on here. Powell is guiding that the median interest rate is likely to hit 5% or higher, which implies that there may be several Fed officials, above that level. So there's going to be some Fed officials, median's the middle. So there's going to be some who are like, let's go 6. There's going to be some who will probably be like, oh, let's stay around 4.8, blah, blah, blah. And we can have a look into what we were anticipating. Actually, I'll just do this now. St. Louis. St. Louis, the Fed, just have a look at this. The median, he's now saying this median is going to be closer to 5%. And then looking 2023, it was only anticipated to go up to 4.6, and then down to 3.9 in 2024. So he's off by a long way. So we're anticipating this. Ending the year, I'm going to say, I don't know, maybe at a level of, maybe at a level of around this 4.75, and then just smaller rate hikes going forward. But that's one thing to consider. We still think there's some ground to cover before we meet that test. We're still not there. More pain to come. Hence why we're having all of these initial drops that you saw in the market over here as he was talking. There are likely several meetings away from tossing in the towel on rate hikes at a minimum. Again, there has to be more done. Powell's more hawkish comments came when he said the window for a soft landing has narrowed because inflation has not come down. The soft landing was, we'll have no recession. As we begin to tail off, the markets begin to pick up, and then, unemployment just smooths in. That's ideally what we want without a massive recession. Well, when he says the window is narrowing and we're already in a recession, to 2 quarters of negative GDP growth, I don't really think he means, a soft landing. I think it's worse than what he says it is. Rumors of the death of the consumer are premature. Some economists think that the average consumer is struggling in this high inflation environment. And I would argue, yes, absolutely. We see it, like they see the data in terms of reports and numbers, but, we see it on things like social media, for example, where, I've seen it myself. Loads of people in America or the UK or whatever, are being upset about the cost of petrol or being upset, or gas in the US, being upset about the cost of bread and all this different things. So, we see the first-hand kind of experience. It might be, I guess a smaller sample size, but obviously, yeah, they're looking at, there's a lot of rich people in America. So they have skewed data as well. But by some measures, personal savings as a percentage of disposable income have plunged. So people don't have savings. And it's not really looking good, is the bottom line. But this is where I do want to put a bit of an emphasis on this over tightening. So stocks are down, home prices have fallen, and government transfers are back to pre-pandemic levels. But it looks like it will take time for these factors to slow spending. Erring on the side of over tightening, Powell said the Fed has not over tightened yet. I'm pleased that we have moved as fast as we have. Later, Powell added that if the Fed were to over tighten, it wouldn't be the worst thing. And this is what I said earlier. We could get, inflation down probably to about 1%. And this is what the over tightening. I mean, he's not going to obviously go down to 1%. That would be pretty crazy. But he's saying it's better to over tighten because the Fed could use its tools to support the economy, i.e., let's over tighten and then we just print more money again, which seems crazy because that's what's got us into this position in the first place. But he's saying, look, I probably won't be able to get it bang on. We're not just going to have a nice, easy, soft landing and hit us at that 2-3% inflation per year. But if we over tighten, we get to 1.5 or something, we'll just print a little bit more money and then everything will be okay again. This is, I think, what he's getting at here. That's a better scenario than not getting inflation under control, he suggested, because in that situation, inflation will become enriched and the costs of bringing it down will be much higher. So there we have it. We have a 61% chance of having a 50 basis point coming up for December. This, I think, is probably quite likely. I'm going to say it. I think it's quite likely that we will have a 50, but then I also think we're going to have a 50 in February and then probably a 50. Okay, so currently we're looking at a 50 in December and a 25 in February, but then probably followed by a couple more 25s. So that should be up to 5. Yeah, exactly. Oh, and then another 50. I don't know why you'd slow down in February and then accelerate again and do a 50. Why would you do a 25 in February and a 50 in March? That I don't know. I don't think that's true. I think it's either going to stay linear or it's going to be continuing to go up and then start coming down. I don't think they're going to go drop and then go back up again. I think that's a bit crazy. But this is what we're currently looking at. But it's in 5 weeks. Well, it's in pretty much 6 weeks. But we have 2 CPI reports. We have 2 inflation reports. Just having a look here over the next 7 days. We have a non-farm payroll. This is a jobs report. So jobs report coming out, and that's going to be on the 4th, which is tomorrow morning, I will add. And then we have the core inflation report a week later, basically, on the 10th of November. And then again, bear in mind, guys, this is on the 14th. So we have the first week of December, we'll have another jobs report, and I believe we get another CPI report. So looking at this overall, guys, a lot of negative news by him basically saying we still are not here. We need to do a lot more. And the bottom line of where we're going to get to is that we would rather over tighten. And I think this is why the markets are falling. Obviously, I think a little bit of movement to the upside. These technicals kind of show a bit of oversold action on the RSI, for example. And I think the Asian session is kind of buying up. Also, just notice we're around about that 20,000 support level. So there is always going to be some, some buying, some technical traders that are pushing this up, to the upside. But I'm still overall bearish, overall. Not saying immediately, we're going to drop to bloody 10K. But overall, I am still bearish. That was my little overview on what I think Jerome Powell has done, will do. Drop a like if you enjoyed the video. I'll just have a quick look at the comments. Hello, Angela. Disaster. I thought you could hear what Jerome Powell was saying. My mistake. But I gave you a nice summary anyway. So have a nice day, guys. Thank you very much. Subscribe to the channel and also like the video.